Interesting day. I mean, definitely, emerging's screaming throughout the world, and as resources are getting a bid with the dollar weakness, it all comes after we had very weak numbers out of China. But because the whisper was out there, I think, people found this to be somewhat reassuring, and I would say that all indications are that the second half has gained back on in China. Uh, the big macro trades, the big currency trades, the dollar, gold, some of the commodity crosses are places where I think you can kind of tell what's going on. Gold is interesting because it's really lagged, and it should be taking this cue from okay, well, commodities are rallying, dollars weakening, and gold is this ultra view on future inflation. But the gold rally that was the last kind of the better part of April, May, June is something that was a euro related rally. So that's why gold has suffered. But I think as risk starts to roll back on again, and we get the next trend view, which is that things are a lot better, that Europe's healthier. Look at the European banks, look at the PMIs out of Europe today, and you have this place where gold can rally. But bigger picture, the world is feeling a lot more comfortable about risk. Loan provisions coming down. If you look at HSBC's numbers this morning, BNP's numbers this morning, and as mentioned, Europe's PMIs were better. The U.S. ISM numbers today, very encouraging, even though they were a little lower. They were better than expected. The ISM prices paid, construction spending higher. So doom and gloom, not what people are looking to. First day of August, lots of allocation, and it all adds up to a place where markets are screaming higher. If you look at emerging, the EM went to the 200 moving day last week. So we're now starting to test back to levels that were take us back into either pre mid-January before things fell out of bed, even into the highs of March. But for now, I think these trends still have some room to go. The dollar at 80.63 is the 200 moving day, testing and a place where actually I think you can rally through. So take that as your cue. Continue to like the trading in Shanghai. That has been a big part of the support for this rally, but the resource countries are going bananas, and the currency strength in emerging is not to be understated here, especially in those places seen most at risk. Czech Republic 1.5, Polish zloty 1.58, Turkish lira 1.15 stronger. So fantastic stories. Thanks.